And welcome back to another Lumley trading live stream. Today is the 18th of July, and yeah, markets have already opened. So I'll put it onto that screen because I just noticed we were on the wrong one. So then, to run through some of the key things, firstly, Charles Schwab's. So actually, if you're using Thinkorswim, now the people that own this platform are up 13.5% pre-market, or actually as the markets have opened, so gapped up 13%. Why is this? They did have their earnings. Again, a lot of the big banks did, or a few more big banks did have their earnings today. So again, pre-market, you had Bank of America, you had Charles Schwab's, you had Morgan Stanley, you even had PNC, BNY Mellon, which is Bank of New York. So yeah, you have a lot of big names doing it pre-market. Again, Bank of America did gap a bit. You can see that up about 3% as of right now. So we'll throw all these up. So again, we have Charles Schwab's, we got Bank of America up 3%. We can even check what BNY is doing. I don't even know if that's a ticket, just BNY. It is not. So let me quickly see what the ticker is. I can't really see, it's too small. So I won't put them up. I'd do PNC or whatever, so another big name. So again, we're having a lot of relatively big moves today. Again, well, the weird thing with this is with Charles Schwab's, their revenue this year is estimated to go down about 8%. So gapping 13% off that news, quite strange, I think. Again, Bank of New York, theirs did come out quite strong. So again, that gap makes a bit more sense. Now we will run through some other things real quick. So let me just quickly send this out to the Discord so everyone knows we're live. And then we can start running through all those key things. So firstly, what are the big gappers up today? So you have FBK, MVS, ATRO, PKX, LMT, SYF, and Bank of America, so BAC. Again, these are all off earnings or guidance. Now, in other news, you have KPIT. So again, we'll pull these up as we go through KPIT. And then we can actually throw Bank of America over there, or sorry, Schwab's over there. KPTI. So yeah, we have KPTI. Okay, they are up around 6.5% now. They have given back actually most of these gains. This was a big mover though, at least pre-market. This was after they received an FDA fast track. So again, that's a big catalyst. Then you have TDS. See if they're still moving. TDS, yep, still moving off the open, now up 10%. They provided an update on the amount of lead covered cables, so that's a catalyst. You then have CLBR, they're up 5%. Again, not too much volume, so probably not going to be one I would even be looking at to touch, but they do announce the request to redeem public shares. You also have them PTCT. Okay, they're down about 1% off this news, and this is down to them naming a new CFO. You then have SSYS. We can check them out. Again, they're up about 3% as well. That's because they're to engage in with discussions with Nano Dimensions. Increases its proposed price to $25 per share in cash out special tender offer. So again, yeah, then they're looking to be bought out, or having bids to be bought out at $25 a share. But what you can see is obviously we've got not really to that price, which kind of tells you more than likely that people aren't expecting this deal to go through. You can check NMDM, which is the one offering the buyout, not really moving off this. So that is it. And then we can go over to FDMT. They're basically flat on the day now. But this was completes enrollment of phase 2 PRISM trial. Not prison as well, PRISM. Then you have BRY up about 6% on the day. This is because they are to acquire Mac, I don't know how you pronounce it, MacPherson Energy for $70 million. You then have Triple D again. I think this was related to the news we just spoke about. Yes, the SSYS news. But they're also up just under 2% off this news. You then have CDNA, which is up basically flat. And that's because they announced favorable court decision in false advertising case brought by because this is bad news for CDNA. So NTRA, which is, I'm assuming, the ticker for the company they went after, the court sided with them that the false advertising, and there was no false advertising, and again they were sued by CDNA. Then you have AGRX. One sec, 8. I'll check the NDM in a sec. And then you have ARGX, which commences global offering of $750 million of ordinary shares. Can you do an analysis on NDM? Sure. This is one actually I'll say this off the bat because we did actually trade this. Was a winning trade, but I'm no longer trading this anymore. And I'll go through why I'm not. So firstly, again, I haven't actually changed the level. So you can see where these were when we traded this originally. You can see at 315, this is where you had, well, now it's the second deviation on the 1 year, but this was the third deviation from the 6 month. You can see this has now gone up to $334. So that's a move of, 6% in just probably about a week or so. That's why I'm not that keen on this stock to trade it. Again, if you're maybe trading the momentum to the upside, could definitely be good from a reversal standpoint. I'm not liking this as a trade anymore. So again, that's going to be, if you're trading direction, it could be good. But anyway, from where we are now, we're kind of holding this second deviation. So if we are looking for targets, it's going to be around 334 to 346. And then again, I would always be cautious because you are coming into those third deviations when you come up to that high. So again, if you're looking for the trend trades, again, I would be more cautious coming into 335, 345. And yeah, definitely taking in profits. And if you are looking at it short bias, again, I would probably still be more patient and wait for a push to this level because I do think it's quite likely considering how well we're holding up at these levels. So again, I would be a bit more patient on it and let it kind of continue up. But yeah, I mean, that'd be the main thing I'd be watching for. And NDM is just a move to kind of that range of 335 to 346. If we did start pulling back, we do have supports at 288 and 280. And if we fail them, again, probably going to end up actually coming back to fill that gap in time at around 240. So that's what I'd be looking at anyway on NDM. We also actually have analyst comments. So the stock CASY, if they're still moving, they're up 2%. They were upgraded to outperform from neutral by Credit Suisse. You then also have AIRC. They're basically flat on the day. You've given up all these gains since the open, and they were upgraded to outperform as well for market performance at BMO Capital Markets. So I think that was the main thing that's really happened to the upside. Then quickly to cover the downside, which is nowhere near as much, you have the stock MASI. They're down 21%, again kind of pulling back now the markets have opened. This was down to them issuing Q2 revenue guidance, and again, it's going to be a lot worse than expected is why you're going to sell off that much, because again, didn't even notice this is a relatively large cap company. From a deviation perspective, can be a great buy. Again, it is off fundamental news, so you're always going to take on that extra risk when you're trading technicals off a fundamental release. But from where we are on the deviations, could be a potential great purchase considering that we're still below the third deviation on both the 6 month and the 1 year. So definitely something, if you want to potentially be looking at along, could be something. Again, you're trading technicals off of fundamentals, you're going to be taking on an extra risk for that, but definitely a opportunity. And to be honest, I'm probably going to look at trading that. I may throw that on the watch list and look to trade that myself. Just going to really look how I can trade it, but I guess we'll do that after we finish covering everything else. You then have CVM. So they're also down 20%. You got a nice retest of the anchored VWAP and starting to continue down off that move. This is because they're offering a offering of 2.5 million shares of common stock at $2 a share. To be honest, I would have expected it to sell off that bit harder. Oh, I'm guessing this was released exactly as a market close, because again, you can basically came down to tap that $2 and then a bit of buying pressure stepped in. You then also have BOD. Let me check. That didn't actually move too much pre-market. Still hasn't really moved much now, but this is moving on the update on co-control partnership for Vantage Towers. And then the last three stocks I want to run through real quick is going to be COMM. Now, this was downgraded from a hold. Oh, no, sorry, downgraded from a buy to a hold by Deutsche Bank. So that's the 7% sell off there. From a deviational standpoint, though, was quite overbought. So again, made sense to expect the price to decline, but not really near any buy levels. Again, I'd be looking for about 180, which is about a 50% sell-off from its 52-week low. So again, we'll see if we actually end up hitting that. You also then actually have Norwegian Cruise Lines. You're seeing these cruise line companies really be flying recently. They're really holding up at these highs and holding up well. But you did have them downgraded from a buy to a hold by the company Trust, I think it is, TRUIST. And then the last stock to cover. And yes, BF, I can do QSI. Let me just go through this last stock, which is CE. This was also downgraded from a buy to a hold by Deutsche Bank. Doesn't seem to be affecting them too much. You had the initial sell-off, but we're already kind of flying to the upside, so they don't seem to be too affected by this. Again, they are still in a bit more of an overbought territory, so probably not something I'd be looking to take long, even though it's taken the news relatively well. And now QSI. So let me have a quick look at this stock. Quantum SI is the company. Let me have a quick look at it. Again, I don't really know what this company does. It seems to be flat basically today, but a massive move. Was it that, yeah, yesterday had a massive move. Let me quickly see if I can see what the news is, because then that can kind of give me more insight into it. That's not going to be the catalyst. So the 17th, oh, there we go. Okay, I can't actually see what the catalyst is for this, though. So we may just have to go strictly off technicals. Yeah, really, from everything I can see, then it is just share surge pre-market after declining on the Friday. So again, I can't see the catalyst, so if you know what it is, let me know. Oh, so, sorry, you just put it in there. Kathy Woods. One second, let me actually get the comments on my phone. For some reason on my computer, it's actually like super glitchy. So let me just open that up, then I can see. Okay, Kathy Woods bought a ton. Okay, then okay, makes a bit more sense on why it moved. So from what I can see, it's actually at an extremely overbought area. So again, for this, we do use these standard deviation channels, and what you can see is, firstly, where you got the original sell-off made sense from a technical standpoint, and that's where you came into the third deviation on the 6 month. You then got that sell-off, you get that pullback, and then I'm guessing then you had the Kathy Woods announcements that she's bought a lot of the stock. That's going to be your catalyst to then push higher. But again, where did you push to and where do you start to slow down? It's paying attention to that next third deviation, which was at $3.39. And as soon as we came into this level, again, you're starting to see it start to hesitate. So what I do quite like with this stock then is it is respecting these levels. And again, it's moving how you would expect it to, basically. It's coming to this level, you expect it to sell off. You've had then a good catalyst. So again, the fundamentals are always going to outweigh the technicals. So you blitz straight through. And then as the fundamentals are more starting to be priced in, you're starting to hold this level. And again, now what I would really be looking for is I would expect this stock to sell off. And the reason I say that is, again, this is usually the highest you tend to see the stock when it's at its third deviation, the final one of the two. You very rarely see stocks trade above these, and even if they do, it tends to be very short-lived. So 340, I don't really see it, again, staying above here. So if I was long biased, be something I'd probably be taking those profits. Again, this is trading perspective. If you're looking at investment, then you might be looking at it differently. But from a trading perspective, makes sense to really kind of be getting out at this area, and even potentially being short bias, looking to play down to 290. And if we wanted even further down targets, we could be looking at 270, 245, and $2 as supports on the way down. And again, if you're long biased, whether that's from a trading or investment standpoint, these could also be levels where they could be better entries. Again, taking your profits here and then potentially re-entering as we come back down to these levels. So that's what I'd be looking at then on that QSI, if that helps. Now, is there anything else moving? You got some of the frequent movers moving quite a lot. You got Rivian up about 5.5%. This stock I'm liking, but I want it to go that bit further. I want to see it around $28, and this is where I'm going to start taking this stock short buys, because it is going to be quite overbought. You then have Fubo holding up near these highs pretty well now. Still staying around $3. You pulled back off the 328 level. So now if we break that, we're looking for that next deviational level, which would then be 351 as of right now. You then also have Novaks up about 2.5%. Actually, you have quite a lot of them up around 2.5%. You have Novaks, you have Kavana. Again, Kavana's staying well on these highs, testing its 2-day anchored value up right now. So we'll see if we can break through. With the Kavana, annoyingly, it hit our target, but we didn't see it on the day. And that's when it hit 42.75. That's when we would have been short buys from it. Pulled back great, but now it's kind of hit all those levels. I'm going to be a bit more distant from this stock. This AI stock, you're starting to see really slow down a bit now. So if I pull that up, yeah, it's kind of stayed flat. You had the initial move, a mega move coming into February, and then you kind of consolidated on that level, and then coming into kind of beginning of June, you then had that, or end of May, you had that then second big move, and again, seems like we're kind of consolidating within that range. No problem, BF. Hope that helps. So that's interesting. Again, Mullen, this stock, I think every day you see this is down 5+% every day, down at 15 cents. Again, we do cover this stock quite regularly because a lot of people always ask for it, and I think it's because a lot of people are left bag holding it. But again, whenever you see a stock, firstly, this one was $28 a year ago, now down at 10, 15 cents. These are probably not the stocks you want to be holding. Even when you see it go down, coming down, or basically whenever you see these stocks do a reverse stock split, that's when I will never really touch it. Normal splits are fine. Reverse stock splits are never good signs because the only reason companies do that is usually to avoid delisting. And again, that's never really a good thing. I think that's the key movers. Then on the gap side, on the gap scanners, you have, let me just quickly update that, make sure they're all the most recent ones. You have MICS, which is the leading gapper for today. Not really near any key levels though. You then also have Link that did hit key levels, starting to sell off quite hard. You then have PWM and Prestige Wealth. I think this was a recent IPO that was going quite crazy. Yeah, it is. I always thought it was a Hong Kong company, but maybe it is. I think this is. Yeah, I think this is the one that's been quite crazy. Yeah, this Prestige Wealth. It seems a bit like a HKG again. It kind of IPO'd, has gone crazy again. You'll probably see a month down the line, the stock will probably be way below its IPO, but for the meantime, looks like it's super volatile. You also have Schwab's picking back up near those highs. Interesting to see. Interesting. Again, Bank of America at the highs. PNC's turned green, which is all quite interesting. You also have Morgan Stanley. They're up 5%, again, holding up. All of these are holding up relatively well, which is quite weird when you see basically SPY flat on the day. The bonds are basically also flat, and the dollar only up about 0.15%. You're also seeing the VIX relatively flat on the day as well. I don't think there's too much else to cover. Again, the T-Mobile I'm liking. I keep seeing it's when we did analysis on it yesterday. I kept calling it T-Mobile for some reason. I mean, AT&T. I like it at these lows again. You're at 30-year decade lows, and it's not like these small caps when they're selling off. You have no value in the stocks. Again, these do have relatively good balance sheets. They do have good fundamentals, and they pay you a steady dividend. Again, AT&T did change. I think it was early 2022, maybe the end of 2021. They did change from paying about 50 cents per quarter down to paying 27. But this one's now just flat. Instead of them increasing it regularly, I think they're just keeping it now flat at this 27. But again, the yield on what you're paying now, you're getting $1.10 per year per share you own for a stock that's at basically $14. You're getting, is that 7-8% a year just on owning the stocks again, and you're buying them at 30-year lows. Could definitely be some upside on the shares, and you're getting the dividends. Again, it's definitely a play I'm liking at, especially on the long-term account for that exact reason. You also have UNH holding up its earnings move quite well, gapping it again today. Looks like we're about to hit $500 again, 5, or you have at $463.37. That is our first deviation on the 1 year. So actually could be a bit of a resistance. I think we have already hit that, but we'll see how it plays out properly. But again, that level's right there. Looks like we're getting that retest. Actually, we tested it, sold off. Now you're getting that retest. If we break above it and retest this level, could definitely be a strong move to kind of break out of that $500 level. Did want to check Carnival Cruise Lines. They're up again 5% today. This stock is just crazy. So again, this I'll throw here. This move was actually really nice. Coming into that 1938, that was our third deviation on the 6 month at the time. You got that strong pullback, and now it looks like we're going to go in for that second move and break even higher. Now, I would be more cautious because, again, you can see how quickly these levels are moving. A bit like what we talked about on NNDM. You're coming into around 1940, and in a week, that level has changed to $2.20. So from a percentage move, I mean, we can see what exactly that is a 15% move or 14.5% move. That is massive. That is mega. I wouldn't want to be playing against a direction really on a stock like this just by seeing how strong those deviations are. You also have Morgan Stanley CFO coming out. He just said for the first time since the beginning of the year, June saw positive monthly inflows for equities, which is actually quite interesting to see considering if we zoom out. Actually, I can do it on this chart here anyway. Again, this is a yearly chart. You start here. Markets have been up relatively strong, super strong year to date. So weird to see it's the first month with actually positive inflows. I think we covered everything else, unless people want to run through anything. I think we'll kind of just let the Bloomberg TV play out for a bit because I need to eat some lunch. And don't really want to be munching down the mic. So again, if you want me to run through anything, I will quickly. And then again, we'll let kind of Bloomberg TV just play out for a bit. Or actually, I think it's CNBC, sorry.
Said any of the things that the analysts would say, I'd feel much more comfortable. But as it is, all that saying, I prefer Schwab.
Yep, Schwab is a mover. Actually, so is Morgan. Jim, we'll see you tonight. Morgan Stanley's on the move as well.
Oh, see, that's good. That was a great quarter. I mean, and we have him?
Yep, we'll talk to him.
Tell him I said hi. He's the real deal.
Some of these comments about equity flows in the month of June. Dow's up almost 180. Don't go anywhere.
That's typical, that. As soon as I was going to let it play out, then it cuts to the ad break. So I guess we'll cover things for a bit then. Anyone as well watching, if you're enjoying so far, don't forget to drop a like and subscribe. Actually, for some reason today I've completely forgot to put the Squawk on. So let me quickly get that up. Because it's even in the title, we got to have it on. Don't know why I completely forgot today, that's quite weird. Okay, it's now on in the background. Again, Squawk doesn't play at all times, it's just if anything key comes out. Any sort of key breaking headlines or any news comes out, obviously then it will shout it out. I tend to put it high just in case I don't have time to adjust the volume, so it will be loud when it talks, but it's just in case CNBC's playing, it will be louder than that. So you can clearly hear everything that's being said. You also actually have Bank of Japan's unless our assumptions on need to sustainability achieve 2% target changes, our narrative on monetary policy won't change.
Challenge in July. And 1 minute remaining, I'll lead with the US business inventories month over month.
So again, this is going to, we got business inventories. You then also have FOMC member Barr starts to speak. And then you also have the NAHB housing market index coming out. Again, all in about 30 seconds from now. So again, just watching this, well, really anything on these first four is what I'll be watching. SPY and S&P, again, they'll basically move the same. You then got the 2-year bonds and the euro dollar. So we can start seeing how everything moves off this release. Okay, we have the release coming out in about 5 seconds-ish. Not expecting a mega move by any means.
0.2%, 0.2% as expected. NAHB housing market 56 as expected.
Yeah, both came out then exactly in line. Again, you can always check these out here.
German bonds extend gains, 10-year yield falls 10 basis points to 2.38%.
But again, you will now also have FOMC member Barr speak. He doesn't ever tend to really move markets though, so not too focused on that.
The CNBC app.
You do also have then this coming on, so I will let this play out. One thing I did want to note though was I remember seeing it this morning. I don't think we covered it today. About it was to do with what the markets are pricing in for the move. I can't actually see it right now, but it's something to do with the market is now fully pricing in a quarter point basis point, basically guaranteed a rate hike coming into the FOMC this month.
And Staples. We're 30 minutes here into the trading session. We're going to get to the banks in a moment, but here's some other big movers we are watching this morning, starting with Pinterest. Getting a boost following an upgrade to
We have posted Fed's Barr's full speech on the feed for all those interested.
Stabilizing, pointing to a recovery in the second half of the year. Chipotle signing its first ever franchise partner to open locations in the Middle East. Initial plans calling for 2 locations each in Dubai and Kuwait. And watch Novartis moving higher after raising its full-year outlook on strong pharmaceutical sales. We're going to talk to the CEO of Novartis in the next hour of Squawk on the Street.
Let's get some eco data crossing the tape. Rick Santelli's got.
I'll quickly read the conclusion from the speech then. In closing, promoting fair and equitable treatment to all consumers is the right thing to do, and this is also just good business. Ensuring that potential borrowers are treated equally can mean developing previously undeserved communities, creating more opportunities for lending and expanding markets, which can result in better returns for banks. Fair lending is safe and sound lending by adopting sound credit policies that include fair lending principles and controls on loan officer distributions. And by maintaining strong compliance management practices, banks can help advance a safer and fairer financial system. Let me stress how important it is to remain ever vigilant against discrimination in credit transactions. I appreciate the work of the NFHA, you in the audience, and others who are in the front lines of fighting discrimination in housing and lending. Thank you for inviting me here today and enjoy the conference. So it doesn't seem like anything will really move markets off that.
And has only come down slightly in the last week. Of the index's 3 components, current sales conditions in July rose 1 point to 62. Sales expectations in the next 6 months fell 2 points to 60, and that's where interest rates and affordability.
Also just seen ticker WMG, so that's Warner Music. TikTok announces licensing partnership.
Last year. Now, despite higher mortgage rates, builders are using fewer incentives. Just 22% of builders report cutting prices in July. This is down from 25% in June and 27% in May. Sarah?
All right, Diana, thank you. Diana Olek. Well, we've got a lot of economic signals. We'll talk retail sales and some of the data, but also the chatter we're getting.
Just a correction from the wires. Earlier we got a headline from ECB's not saying we are optimistic to see inflation hitting 2% in 2024. The correction is ECB's not says 2% 2024 inflation view is optimistic.
We know we're in a privileged and advantaged position relative to our client base. I just think it's interesting. You look at that global banking set of results over the course of the past year and a half in particular. That's extraordinary resilience. And look, Q2 is tax season.
Also just seeing the US to announce $1.3 billion in military aid for Ukraine.
Tax payments of 14, 15, 16 billion last quarter. So there's beginning to be a little more stability.
Pretty good. And that was the CFO, by the way. My bad, not Brian Moynihan. Heard similar messages from some of the other banks as well this morning. We're going to talk to James Gorman. Leslie Picker's got an interview with him this hour. But here's what he's saying about the overall environment.
We are and have been dealing with a number of uncertainties, including but not limited to the CCAR results, business environment, Basel III upcoming endgame proposals, and certain other pending matters. I committed to the board that I'd lead our response to those issues, and when I do transition out of the CEO role, I'll remain as executive chairman for a period of time. We are fortunate indeed to have 3 very strong internal candidates that the board continues to evaluate along appropriate processes for their readiness to step up as the next CEO of Morgan Stanley.
So a lot more going on there.
Yeah, he's talking more there
Yeah.
about succession, of course, which we know, and they've set it up where they have 3 candidates internally. You do wonder how that impacts the organization when you have 3 vying camps for the top job, knowing that potentially 2 of those people will ultimately leave if they don't get it. But he also had only, more or less positive things to say, to the extent they commented on it in terms of their expectations.
Oil futures extend gains. Brent crude up by $1 a barrel.
Wealth management unit, 16% revenue growth. I don't know if you can judge it by the quarter alone, but that was the saving grace and has been for Morgan Stanley.
It has, and it's differentiated it, of course, from what it was always, for so many years, its key competitor, Goldman Sachs, which is not as well, at least is not judged as much on on that part of the business, because as a percentage, it's not as large. And again, Gorman will be joining us about 25 minutes or so from now. What about that sales number today, Sarah?
Retail sales?
Yeah.
So on the surface of it, it looks like a miss, which it was, 0.2% spending on the month. The expectation was 0.5%. But if you dig beneath the headline, it was actually pretty good. And one place where the economists go first is the control group, or core retail sales. It strips out things like autos and restaurants, and this is what feeds directly into GDP. And that was a very strong number. That was a 0.6% advance, twice the month before gain. So, Carl, you're going to see that in the second quarter GDP numbers, which before this report were already looking good, according to the Atlanta Fed, tracking 2.3% growth.
Yep, that's why Goldman last night said maybe growth really is rebounding. Consumer spending is pretty solid. Manufacturing activity, rail volume, steel production, export containers are all kind of on the mend, despite the weakness and the doubts that some of the bank stress in March led people to believe. Look at the transports today. That's a new 52-week high going back to April of 22. Best day for regional banks here since June 7th. And Schwab guiding a little bit higher on net interest margin for the coming quarter. That's going to be your big financial mover today.
Everybody was wondering if for Schwab, if the cash sorting issues were over, which is all the money that's been shifting into lower margin business for them as people chase higher interest rates. We're going to talk to Walt Bettinger in the next hour of Squawk on the Street, because that's been their problem. But so far, a lot of the analysts are publishing this morning that it looks like that's behind them. And look at the move in the stock price today. But as it relates to the macro, David, question is the regional bank crisis over?
I know. Well, I was just looking at shares of PNC, which obviously is one of the larger regionals. It started the morning down, but it's actually in positive territory as well. So you're talking about a positive response now to all the big earnings we've gotten this morning, whether it's Schwab, Bank of America, Morgan Stanley shares up over 5%. Now PNC, Sarah, despite what was a miss, as you say.
Yeah, and there were lower net interest income there. So that was a little bit of a miss. But again, no major problems that we might have been anticipating as a result of the Fed continuing to raise rates, which is still going on, right? Which is part of the problem.
You're starting to see PNC and Schwab's pull back quite heavily, while Bank of America and Morgan Stanley hold up quite well.
Instruments and assets. There was a survey from the Federal Reserve that was a little bit interesting about lending conditions, and I think this is still something to watch. We can't call an all clear because obviously lending conditions have tightened, but this new survey from the Fed showed that the rejection rate for loan applications for Americans jumps to almost 22%, 21.8% in 12 months through June. And here's the auto loans in particular. A big increase there in terms of the rejection rate for people trying to get loans, 14.2% from the 9% in February. That was before SVB failed. And it increased as well for credit cards, credit card limit, mortgage refinance applications across the board. So we're watching it. And also the demand for credit has been down as well as rates have risen. But again, it's not setting off major alarm bells.
No, I mean, the survey itself is, a decade old? Not a huge amount of data to go by.
Sure. But everyone's trying to figure out whether we were going to have a severe credit crunch. And no question, credit conditions are tightening and lending standards are tightening. And that's what's supposed to happen with higher rates anyway.
It is. And we did wonder, though, what the impact would be. And we still are of the failure of those 3 banks and how other banks that are dealing with a deposit base they may not be as sure about, or how how willing they are to actually extend loans. And to your point, just, in terms of the risk premium that they're willing to take, which makes it almost unlikely the borrower is willing to. Commercial real estate continues to be a key concern. It's something we're going to be talking about most likely for the next 2 to 3 years as this sort of rolls on. Sarah, we did spend a lot of time over a month ago talking about Treasury issuance, remember? And the worry that there's so much issuance coming after they finally got that deal done. Where
There's
are
a lot
we
of
on
issuance
that?
here and coming, and a
it-
lot of auctions.
And it's not having an
Well,
impact?
it's coming out of the
Money markets.
the RRs, and not the bank deposits, which was the concern, which would have been more of a liquidity suck. It doesn't mean that it's not still a risk. All these things are risks still. Commercial real estate, credit conditions, the fact that the Treasury still has to issue a lot more debt. How about the fact that interest rates remain high when we're going to have a lot of financing of our debt to do for the U.S. government? I mean, these are all things that matter.
We talked with Larry Fink about that last week. I mean, it's interest costs as a percent of the budget may eclipse everything we spend money on, including military, in the not too distant future. We haven't talked a lot about China, and I just wonder, does that figure into some of the conversations you're having on the macro
100%.
level in terms of what has been a significant and unexpected slowdown in that country, the world's second largest economy?
Yeah, and everybody just assumes that they're just going to try to stimulate their way out of it. And the question is how much, and are the stimulus measures targeted to some of the problems that they have? And when are their deflationary reads going to start impacting here? I think the big unknown on China, and some of the conversations I have with executives, is how's it going to affect them that everybody's taking the supply chains out of China? And how much is actually coming out of China and going to India or Mexico? What's that impact long term on their economy at a time where they're not showing a big COVID recovery that we expected?
I mean, the data this week, private fixed asset investment is negative, actually going down. If it weren't for the government, they would have investment strength. Literally, outflows are happening in that country, and there was a point made about this.
Also seeing an announcement from Redfin, so kind of like a Zillow alternative. Just 1% of US homes have changed hands this year, which is the lowest share in the last 10 years. Roughly 14 of every 1,000 homes in the US changed hands during the first 6 months of 2023, down from 19.
So we get mixed signals.
Down from, 19 of every 1,000 during the same period in 2019. So yeah, just less transactions happening.
Index hits over a 4-month high, up 1.5%.
That youth unemployment number is pretty shocking, too.
Yeah, over 20%.
Yeah.
Let's dig into the banks more and get the Street's take on the latest round of these earnings. Piper Sandler senior analyst Scott Seifers joins us now. Overall, Scott, how would you characterize the quarter for the banks?
Hey, Sarah, how are you doing? Thanks for having me. So, the bank earnings season's gotten off to a better than expected start with the biggest banks reporting. Some of the panicky fears to which you alluded a couple moments ago, they seem to have dissipated. I think investors are reflecting that in valuation. So, realistically, this strong start we've had from the biggest banks, that could lose some momentum as more regionals and smaller banks start to report. They might see more pronounced pressure on their deposit costs, but overall, a pretty good start to the season.
Also can start looking potential shorts on BBIO. Again, they're pushing near that above that $35 now. This was off a catalyst yesterday that they got, I think it was approval for, or going into phase 3 for one of their drugs. So again, the move made sense, but did it justify that move that it actually had? I don't know. I think it's still a bit overbought. So it may look to play the reversal on that using options, but again, it is easy to borrow, so multiple different ways to potentially trade.
Bank of America, for example, and even there, they guided to perhaps a better than expected net interest income outlook for the remainder of the year. So I think that's sort of buoying some investors' hopes here for what the outlook will be like in coming periods. But you even mentioned it a couple moments ago. There's still plenty of wild cards out here. So from my standpoint, the question of sustainability of the recovery in bank shares, that's still a little bit of an open question in my mind.
You've got a sell on Bank of America, right?
Yeah, so we've got an underweight on it. I mean, it's a great company. It's done well over time. I think we tend to look at it in the vein of its peers, probably its closest one, JP Morgan, for instance. And, we just see better reward in JP Morgan, which is our favorite universal bank name. If you listen to Jamie Dimon's comments, JP Morgan really just blew NII out of the water a couple of days ago, which was great. But he's quite candid about the likelihood that their net interest income will likely fall, and is really overstated at this point. So whereas Bank of America is talking about maybe a little more stability, that's great, and it's certainly helping the stock today. But in our view, even if that's the case, for B of A, that probably means even better things for JP Morgan, just because the expectations are a little more rational there and would have more room to move up.
You alluded to the fact that you seem to be looking for more signs to get more positive. What would they be?
Yeah, do you mean on B of A or just generally? I think
generally, yeah, more generally.
Yeah, where I'll address that. So a couple of things. We've got both supply and demand issues in terms of loan growth, right? It's really at this point only credit card, which is just sort of a scale business. You've got JP Morgan, B of A, to a degree Citigroup, but most regional banks don't have that tailwind. So there's really a diminishing share of the pie that's driving most of the growth there. Additionally, we've got a lot of open-ended questions on where capital and liquidity requirements are going to go. So we need to resolve some of those. And then there's, of course, sort of the of eventually we'll have a credit cycle. David, you mentioned commercial real estate, and I'm afraid you were exactly right in your conclusion. We could be talking about that for up to a couple of years, unfortunately. It's just not going to have sort of an aha moment where we can sound the all clear that everything's okay. So just a lot of unanswered questions here that we'd like to get some better clarity on.
But is it going to be a big enough headwind that would change your thesis on some of these names?
Hopefully, you mean,
Commercial real estate.
Leading to credit. Yeah, hopefully not, especially for the biggest banks. As I look at, for example, office portfolios of the largest regionals and the universals, we're talking probably a couple % of loans. So it's not going to be enough to do real damage certainly not to capital. It'd be sort of an earnings issue as opposed to a capital one. But nonetheless, it's the headline. And you've even had some large bank CEOs basically say, look, the spreads might be great, but we're just not going to introduce ourselves into that space because it's not worth the headline risk. So I think particularly for generalist investors who just don't want to deal with the question of how bad things can get, it's just going to represent sort of a reason to not involve themselves in the space until we get better clarity. As you look further down the market cap spectrum, that tends to be where more of the commercial real estate exposure really sits.
Got it. Scott, thank you very much for your quick take on some of these numbers.
All right, great. Thanks again.
Scott Seifers from Piper Sandler. As we head to break, here's our roadmap for the rest of the hour. Don't miss our first on CNBC interview with Morgan Stanley CEO James Gorman.
Plus, we continue to keep a close eye on the telecom stocks, particularly AT&T and Verizon. This a day after AT&T shares touched the lowest level they'd seen in 30 years.
And the Dow aiming for 7 straight days of gains, would be the longest win streak since March of 2021. We'll discuss that with Goldman's David Kostin after the break.
Taking a look at the Fear and Greed Index, 81 out of 100 equaling extreme greed, and the Crypto Fear and Greed Index, 56 out of 100 equaling greed.
I believe that's exactly the same as
this stream is sponsored by To The Tick.
Yeah, I think that was identical to yesterday's Fear and Greed Index on both the normal markets and the crypto markets. Nothing really that key is happening. You had the S&P though bank index just hit over a 4-month high, currently up 1.5%. But yeah, nothing too key I think is really happening. Again, still looking at that potential BBIO play. If we can continue that bit further. From a swing, again, easy to borrow, but we'll probably be looking to trade it through the options. They don't have all the expiration, so either the 31 or the 59 days out is probably the ones I will go for. We also have BPTS now being the leading gapper. On the day, MICS starting to sell off. PWM trying to push those highs again. Yeah, no, this one I do just think will be an interesting watch over the next kind of few weeks. And then again, I wouldn't be holding this. It's probably not even one I would hold overnight for the reason of, again, it's probably going to be like the HKD. It will squeeze or potentially squeeze very far. I mean, it's already gone from $4 to 30. Could potentially go further, but there will be one day where it will just crumble and will probably go down below that $4. You'll probably see it at $1 or something. So again, I would be cautious of that. Also have ICAD up about 20%, starting to break below now, though it's anchored VWAP, so again would probably be a potential retest, and if that retest holds, then again could look short bias off that anchored VWAP. Does look nice. You now have Cavana up about 7% as well. Strong move to the upside at $39. So we have the deviations at $41.85 and $45. So again, those would kind of be the levels I've been paying attention to from resistances if we do continue to the upside. I don't have an alert, so I might just send one out.
Up days, the longest streak in a couple of years. Our next guest is also looking ahead to the upcoming NASDAQ 100 rebalance. Joining us here at Post 9, Goldman Sachs Chief U.S. Equity Strategist David Kostin is with us. Did a lot of good work on this rebalance and sort of what it means historically for some of the largest names in your note this week.
So one of the things that is interesting, it's only the second time in 25 years that the NASDAQ 100 index is being rebalanced. Last time was 2011, and it took Apple from 20% to 11%. And this time what they'll be doing is taking the largest stocks in the index and reducing their weight because it doesn't really reflect, at some point, the top 7 stocks, Carl, were about 56% of the index, and now they're going to be down around the mid-40s, about 44% by our estimates. And so that's going to take place next Monday morning. And so one of the issues that we think about is, what does it mean for a passive investor? And one of the challenges is, as an index, only 20% of active mutual fund managers are beating the benchmark. And the reason for that is that these large stocks have been lifting the market, and that's making it challenging. It's really difficult for an active manager to own a index weight in those stocks. They're going to be reducing the benchmark. I think it make it slightly not lower, make it easier, just be a more representative, a broader market. And I think that has major implications for the broadening of the rally. It's just not the few stocks that are going to be leading going forward. We need to have, once they need to, if one has a breadth expansion and you have more companies that participate in the rally, then you could see the index move generally higher.
So, but it's not pushing you to move any targets. No, for this year or next.
And this is a challenge because right now the S&P 500 around 4,500 is at our year-end target, and it reflects in our assessment the idea of the economy continuing to grow. The idea of a 2% GDP growth is consistent with our economics.
Just to quickly cover actually the Morgan Stanley, because I don't think we covered it this morning. They did post their second quarter earnings. Revenues did top analyst expectations, helped by record-breaking wealth management results. Earnings came in at $1.25 earnings per share, compared to the estimates of $1.15. Revenues were $13.4 billion compared to $13.1 billion expected. And I think that was really the key highlights of it. And with Bank of America, earnings came out at EPS was 88 cents compared to 84 estimated. Revenues were $25.3 billion compared to the $25.05 billion. And then the bank said earnings rose 19% to $7.4 billion. And yeah, that would be the key things between the two.
Where inside the market do we find that? Healthcare stocks, particularly
The Russell 2000 index up 1.2%.
The cheapest stocks they've been relative to the market in 30 years. So that's some value. So think about value cyclicals. Another way to think about that, some capital goods companies, the economy continuing to improve. Some of the economic data that we look at, Goldman, would suggest the economy is getting better and continuing to grow, likely to avoid a recession in the next 12 months. If that's the case, cyclical, some of the capital goods companies, non-bank financials likely to do better, and some of the semiconductors.
If you strip out the Magnificent Seven, the multiple looks a bit different. I know you've done a little work on that. Is there a way that investors should be thinking about that, David, in terms of the impact that this Magnificent Seven's had on not just the multiple, but overall the actual market weight?
So you are entirely correct. It has been a difficult market this year, and you've chronicled this on your show and others as well. The market trades at around 19 times forward multiple. Those big stocks that you referenced, those Magnificent Seven, trade at 31, 32 times forward earnings. The rest of the market, excluding those, around 17 times. So a little bit of a catch-up. That's why value would suggest if you had some expansion in multiple for the non-leading stocks, you can see the market move a little bit higher. And then look out 12 months from now, market valuation around 4,700, so a couple hundred points higher than we are today. That's kind of how I think about the intersection between the Magnificent Seven, if you want to use that term, and the other 493 stocks.
Do all these active managers who are significantly trailing the benchmark start to just buy the Magnificent Seven to try to catch up?
They are precluded in many ways from doing that because of the SEC guidelines on what constitutes a diversified mutual fund. In order to be marketed as a diversified fund, there are limitations on concentration. No position, and collectively the positions greater than 5% weight, if they add up more than 25%, that sort of puts a ceiling on that. And so
What's
companies
up, Mario?
are...
Welcome to the stream. Again, if you want any stocks to go through, we can. But we covered basically all the key things this morning, gone through key levels. So not much else to do from at least stocks on my watch. So again, we're just basically seeing the moves and listening to CNBC, unless you have any stocks you want to run through.
Looking at how it was likely to do pretty, it's outperformed for it's going on its second month of outperformance.
And that's partly, I guess, in response a little bit to Sarah's earlier question on where else do we find opportunities in the market? Some of the smaller cap stocks. That index has lagged the benchmark, lagged some of the larger cap stocks. And that's an area we think is relatively attractive if we look out over the next year or so.
It does just feel like that there's a lot of good news and a lot of hoping that this soft landing scenario plays out with growth, with low unemployment, and with lower inflation. Aren't the risks tilted to the downside if that's already in the market?
Well, it's interesting about assessing what's priced into the market. It's always a challenge,
I don't know. You
right?
tell me.
Right. So it's interesting to think about that. From an economics perspective, most of the economists on Wall Street are anticipating a recession. My colleague Jan Hatzius, that's not our view. Our view is the economy is likely to avoid a recession.
20% chance.
Okay, so the unconditional probability is like 15%. So it's pretty close to the kind of a normal outcome. What does that suggest? Yeah, a lot of the stuff is priced in the market. That's why 4,500 is our target. That's where the market's trading. So it's largely priced in today. What we'd like.
Starting to see Morgan Stanley and Bank of America being the weaker out of Charles Schwab's now. I guess Charles Schwab's actually already done that downside move, but kind of holding that VWAP now as a resistance. So we'll probably see a move down to the VWAPs on Morgan Stanley and Bank of America. So we'll be watching that, and again, expect to see the same thing on the SPY and the futures. If we can pull back, the main trade I'd be looking at is potential bounce on the anchored VWAPs.
That expires at midnight. We'll talk about what may be ahead for those companies. And don't miss, we have a big interview coming. Morgan Stanley CEO James Gorman. That's his first TV appearance since announcing his plans to step down within the next year. We'll be right back.
Yeah, so we'll probably watch that then all play out. I think we're going to call it a day here. Again, been here for about an hour. All the key stuff tends to happen within the first hour. So after here, it's, you know, just kind of leaving the news on, which seems a bit pointless. So again, we'll be back tomorrow for, mainly the first hour. Sometimes we'll leave it on a bit longer. See